Welcome back to the channel. This is HD Financials. This week you are getting two videos because last week I missed out. I was kind of busy, got distracted, and I know that this I should not have gotten distracted, but at the time there was more important things to tend to. So now that I have the time, now that I have the energy to focus on this, I will be giving you guys two videos, and this video is mostly pertaining to trade management as a whole. We're going to discuss different tools. We're going to discuss ATR, and we're also going to discuss, ways to kind of impact your trading to, better your system and kind of better you as a trader. So to get into it, um, when it comes to trade management, and if you haven't watched the video before this, that video was more so on, compounding or creating a trading plan to kind of attain whatever goal that you have set for yourself, starting from where you are now. So just to do a brief refresher, because I know most of you guys aren't gonna may not have the attention span to go out and do that. So we went out and I just basically did an exercise on, compounding and making a trading plan, kind of in line with this, because this is essentially a trading plan for you if this is how you want to go about it. And other people do it different ways. Some people use fixed, they have a fixed lot size and they kind of choose and when they're gonna increase it. You know what I'm saying? Everybody has a different way about doing that, and I trust that you've already seen that happening, you know, through your you educating yourself in this forex market on how everybody does something differently. But for me, the way that I do it, the way that I'm comfortable with, the way that I trust that will be more understanding for a newcomer. If you are a newcomer, or, just more, it's an easier way to go about it is kind of what I really want to say, even for the more experienced people. But for me, I'm kind of like I'm gonna stick to a certain percentage of growth that I'm trying to reach a day and building on that, daily, monthly, yearly, you know, and so on and so on. And based off this example, I have $1,000 I'm starting with in an account. I'm looking to do about 8% a day, depending on what your trading style is. If you're okay with doing 2 to 5%, which I would recommend, this is could be one trade risking 1 to 2%. Risking one doing a 1 to 2 risk to reward ratio, risking 4%, or you could go ahead and do two trades off a 1 to 1 ratio, risking 4%, or you could do, break it down 2%, two trades, 2%, four trades. You could break it down whichever way you want to go, but just showing that you don't need a lot and it doesn't have to be such a force to kind of reach whatever goals you have for yourself. And this is just over a 20-day period. You start with $1,000. You do eight. You're aiming for 8% a day. At the end of that month, you will have about $3,500. And that's just based off of 20 days, which is 20 days in a trading month. And going back to the trade management portion, which is why it kind of relates to it, not kind of, but does. Uh, you want to start off with understanding how you're going to trade and in what ways you're going to trade. And everyone's going to come out, and I'm pretty sure you've already heard this. Depending on what time frame, you should have a set stop loss in terms of pips that you should be using. And when I started, it was always use depending on what time frame. Maybe I was on the minute, 5 minute. Oh, use a 10 to 15 pip stop loss. If you're going up, use 30 pip stop loss. If you're going up, use a 60 pip stop loss. And for me that was really frustrating because 30 pips on USD CAD is a lot different from 30 pips on GBP USD. GBP is a lot more volatile. So, the space for that 30 pips is a lot smaller than the space for the 30 pips on USD CAD that moves a little bit slower. And there's several reasons that happens. I'm not going to get into explaining it. go ahead and do your research. There's a lot of research out there that's gonna, help you go out and get it, but that's not the focus of the video that I'm on today. Um, which is what led me going into using or finding different tools to help me manage my trades in different ways because of that frustration. Because, when you're going out and you're using different pairs and you're trying to stick to a set amount of risk per trade, it comes down to the numbers. It comes down to being very precise in doing that, and I think that when it comes to, trading, when your own accounts, prop firm accounts, whatever you're doing, I think getting down to the nitty gritty and looking at the numbers is super important and sticking to those numbers. And I think that using just a fixed, pit point, you know, didn't make sense for me, which is why I started looking into different tools and different things like that. And for me, when I first got into it, and the tools that I'm speaking on is like trade managers and different things like that. So for me, when I really got into it, it came from a perspective of like, okay, I need something that's going to help me manage my trades so I don't have to go out and calculate each time that I want to go into a trade, how much is this going to be? Because if you're doing a risk-based, type of trading, every time you win a trade or every time you lose a trade, the trade amount that you're trading with is going to change. It's either going to increase or it's going to decrease, so you want to keep that in mind also. So if you're using a compound method or you're doing that, and this is why other people and other traders are going to say, oh, compounding, it doesn't work. Compounding, it's easier for you to just consistently be at one lot size for a specific amount of time. That's because they really suck at the management. I don't want to say they suck, but maybe it could be a plethora of reasons why they think it doesn't work for them when it clearly does. And usually when you look at it, they're kind of using that fixed percentage, or they don't have like a fixed type of system that they use. They just enter a loss size. They put the stop loss at wherever they feel is comfortable. That's not the trading that I wanted to do. So I don't really listen or follow those types of mentors. Not discrediting them. They're probably super successful in trading and on YouTube. Um, but for me, when it comes to trading, uh, I went with, more of an ATR, average true range perspective, because I feel like it's a lot more applicable. It's something I can use throughout multiple pairs, and it's something that's gonna bring a lot more stability to my trading. So if I was to have someone look at my trading journal, like, I'm looking at it from a perspective of like, if I'm going out and I'm looking for clients that I want to hire me to manage their money, you know, I want some form of consistency, and I want them to know that every trade I take, I'm only risking 2% of your account depending on where my stop loss is. This is something that's down to the numbers. I'm a numbers guy. And if you want to be a successful trader, I think that it's important for you to also be a numbers person and really focus on the numbers, really focus on, the minute details, because trading really comes down to a lot of the minute details. And I think that, and a lot of the times, and that's why I'm not cheat. On this channel, I'm not teaching strategy at all, because usually the strategy is a good strategy. It just comes down to the minute details, and you'll start working out those minute details when you get into using that system and practicing with that system. And some things it's gonna take time for you to get into the minute details. And I think that, so in getting back to the subject, ATR is basically just the average true range. And we're gonna go over a video in which somebody is explaining that. But there are, several resources that, you know, kind of are going to help you or going to help explain the situation. And if you do look at the bottom of my screen over here, you'll see that, the ATR for this pair is 00024. And that's off of ATR that's looking at a period of 40 candles. It's calculating it off of the previous 40 candles. And this is an adjustable amount. Everybody uses a different amount. you know, if they do use ATR. So don't stick to 40. I don't even use 40. I'm just using 40 as an example. You know, and based off the ATR, the average true range, it's just an average of, you know, how much that pair moved in the last 40 candles. And let's just go to editing this indicator list, ATR. We could change the value. We could go from 40 to even 100. Close, and you see over 100. It went from 23 to 43. So it's just basically a general average of, you know, what you get within the last 100 candles, and you're kind of trading based off of that. So I'm setting my risk according to this, depending on how much I want my stop loss to be. Say I want my stop loss to be two times this, it's gonna have my stop loss be two times this. But I also want to show you, you know, like I said earlier, let me USD CAD right here, we're on right now. Let's go to GBP USD. GBP USD, the average true range and the movement is 0.00063. So if you're going with that fixed lot type of situation that I was saying earlier, that 30 pips is a lot different here than it is on USD CAD. This pair moves a lot more within the same amount of period than it does on USD CAD. So don't be fooled when people say, oh, 30 pips. No, you gotta look at the pair. You also gotta look out for spread too, but that's a little bit different. And I'm gonna pull up a video before I even go over the indicator. I'm gonna pull up a video that kind of just refers to that just a little bit. We're gonna go ahead and we're gonna pull up the desktop audio, and we're gonna go ahead and play it. And I do not own any rights to this video. Um, this is a video from No Nonsense Forex. I suggest that you guys go and check out his channel, and you know, maybe you'll go ahead and learn something. But here we go.
But we now need to find out what our pip value is going to be for any given pair. It's not going to be the same across the board. That's ridiculous. We've been through this before. What you need to do is find out whatever 2% of your entire account is. All right, so we said before, if it's $50,000, 2% is $1,000. But your account's going to go up and down, so this number is going to change a lot. So you need to figure out what this is first. And once you do, we call this your risk. Okay? You got that part? We move on. Then you got to figure out what 1.5 ATR of the currency pair actually is. You may have already done this, but this is where you're going to put your stop loss. And now at this point, you know where your stop loss goes. You know how much of your account you're actually risking. So all that is left to do is take that risk and divide it by the ATR. And that is going to tell you how many dollars per pip you need to put on this trade. And then once you do this equation over again, it's going to show you the pip value for every single trade you make from here on out. Make sure you have written this down. I'm going to go to my charts and my trading account and show you how this works and walk you through it. But you are going to want to have this written down somewhere. So go ahead and get all that down. And once you do, we're going to go ahead and go to my charts. So here we are at a practice account I set up through Oanda, just so I could show you guys what to do here. Now, I literally set this up yesterday, and I went ahead and entered a legit trade, so my number is not at an exact 50,000. So what I need to do is take where my account is right now. Yes, even if I have a trade open, this is the number I want right here. And it's moving, so I'll just go ahead and kind of freeze it right here, 52.36. I don't worry about the cents. But we're going to use that number to figure out our risk, 52.36. So pull your calculator up. I'm doing this with a mouse, so be patient. 50,236, and we will multiply that by 0.02, and that's how you get 2% of your account. So I'm just going to round that number up to $1,005, and I am going to write that number down. That is my risk. So now I have to go to whatever currency pair I want to trade, find the ATR, multiply that by 1.5, and at that point I will have almost every number I need. Let's go do that. So as usual, I don't cherry pick. We just go straight to the euro dollar, the most commonly traded currency pair in the world. Go to the daily chart because that's what I use. And I already pulled the ATR up. So the ATR is currently sitting at, let's just say 86. So that's good. Now I know what to do. Pull my calculator up, cancel that, and I will take that 86, multiply it by 1.5, and there you have it, 129. Now I have the numbers I need, and it's nice that my calculator did this, just put them off to the side, to figure out what my pip value is going to be. Now, my broker does this for me. You're going to see this really soon here. But you might want to go ahead and figure out what your stop loss is going to be now and write that down. So let's just look. Do we want to go long or short here? I don't have a dog in this fight. I'm not in this trade. I really don't care which way I go. This is all demo. So well, we are trend traders here. Let's just go ahead and go long. Now, I don't think you can see it, but the price is at 1.1707 as we speak. And we'll show it here. So no matter where it goes, after I'm done talking, let's just go ahead and take that number, 11707. You don't really need the decimal. It's pretty easy to figure out. And then we're going long, so this is going to be minus. If it was short, we would do plus. But minus a 129 pip stop loss. And now we know to enter our stop loss in at 1.157. So then I would write that number down too, so I can plug that in. All right, so we know where our stop loss is going to be. We have these numbers. Now we just go ahead, excuse me, we go ahead and figure out what our pip value is. So take that number there, because we round up, and then divide it by 129. Your pip value is about $7.80. Perfect.
All right, so I trust that that video kind of broke down everything that I was saying and made it a lot more simplistic. And I hope that you followed along with it. So it hinted at the fact that, you know, the pit value, in terms of my trading, it may make sense for you. I'm not downing the way you trade. I think everyone has an aspect of trading that they could make work, but for me, it was just a lot of, it just didn't work. So that's why I went into finding, you know, trade management systems, especially a management system that was kind of based off of ATR, because all that calculation that he just did, you know, imagine doing that on the 1 minute. You know, it's borderline impossible. You know, like you gotta click in all those you know, inputs and all the different price ranges, and you know, you gotta do it on the fly. And when it comes down to the minute or 5 minute, you know, 10 seconds, 60 seconds of time, like that, you may be missing out on a lot of pips right there. You know, so it, that's why I came up with this. So this is something that I had programmed for myself. Um, and it goes based off, it does all the calculations itself, and all I have to do is literally hit buy or sell, and whatever inputs I have here, you know, is gonna be what the, okay, so he was going based off of a 1.5 ATR stop loss, so it's multiplying the ATR by 1.5 and it's automatically placing it from right there. And then these are kind of my trailing settings. This is not, this is how it pops up. These are my trailing settings, and say you want to trail, okay, you got a stop loss as soon as it hits one ATR in profit, you want to bring it to break even right there. Okay, it hit 1.5 in profit, 1.5 ATR in profit. You know, you want to bring it to, you know, zero point 0.4 ATR. Okay, it hit 2 ATR. Now you want to bring it to 1 ATR in profit, and then it go ahead, so on and so on. You hit 3 ATR, you bring it to, to ATR and profit, and you could set whatever period for um the ATR that you want in terms of numbers of candles going back, and you could kind of have that same risk percentage going throughout all trades. So now when you do take a trade on GBP USD, or you take a trade on USD CAD, or you take a trade on Euro NZD, or you even take a trade on an indice, now it's more consistent with with what you're risking, and allows you to compound a lot easier, which is just what I wanted to bring up. This is probably going to be the end of the video. If you are interested in this trade management system, I wish I could show you how it works live, but this is the weekend. So maybe another time. Tune into some others. Tune into other of my videos. In the future. I do record while I trade, so that's not a problem. You'll eventually see it. But if you are interested, it does work with a fixed stop loss also if you want to do that, or a fixed lot size if you want to do that, and it does base the trade management off of pips or points too, if that's what you want to do. For me, I stick to ATR, so that's what I do. Or you could do a risk-based percentage, or you could do a fixed slot based percentage, and kind of have it going like that. So if you want to continue trading the way you want it, you are trading. If you are using fixed slot, you could go ahead and you could still use this and implement this. Or if you want to go ahead and experiment with a risk-based percentage compound type of scenario, where you're using ATR and managing off of ATR. This is a great tool to use. Just leave a comment down below. I will get to you. I will potentially leave my email down below too, which you could email me. But go ahead and leave a comment down below. I won't miss it at all. Just send me a message saying you're interested, and we could go ahead and get that sent out for you. And that's probably going to be the end of my video. I hope you have a nice, fantastic day.